Hi, it's Terry Ryder from hotspotting.com.au, and this is my once a month live Q&A. It's your opportunity to throw your most urgent questions about real estate markets or issues at me live here on Facebook. So please, if you've got any questions about or comments about the major issues permeating real estate at the moment, the media coverage perhaps, the bank's attitude to lending for real estate, or if you've got questions about locations, which, as it usually turns out, most of your questions are about location, either places where you own real estate and wondering how the market's going, or places where you may be thinking of buying either as home buyers or as investors and would like to know what I think of them, what their future growth prospects are, and what the current market trends in those areas are. So please write your questions into the comments panel that you'll see in front of you, hopefully, and I'll be happy to do my best to answer them. If you've got a question about location, it's really helpful if you can give us some context, just naming a suburb. What do you think? Sometimes can make it a bit hard for me because, amongst other reasons, there's often more than one location in Australia with that name. So if you can tell me the area that you're talking about, you know, what city it's in or what state it's in perhaps, and give us a bit of information about why you're interested in that particular area. If it's a location, if you've got questions about, you know, what should I do? I own this property, should I sell it and keep it? Those sorts of questions are a little bit hard to answer without knowing very much about your circumstances. I'll do my best, but often when that kind of question comes through, I have to say, well, look, I can't really answer it without knowing about your circumstances, because there's no one right answer to those kinds of questions. It very much depends on you and where you're at, and why you're thinking of selling something or buying something. So need more information, or perhaps need to have a discussion outside of this forum. But anyway, whatever you've got in the way of questions or comments about residential property around Australia, please let me have it. I'm here for the next hour, maybe an hour and a half, if lots of questions come through. Always happy to stay here as long as you want to ask questions. So while I'm waiting for some questions to come through from you, the real estate consumers of Australia, I've got some issues and some items that I'd like to throw out there. The first one is, we've just publishing this week, our latest edition of Top 5 Regional New South Wales Hotspots. And the key thing that came out of the research we did for this report is that regional New South Wales is doing things very different to what Sydney's doing. And I reference again the really appallingly bad coverage we're getting from media on real estate issues at the moment. It's usually pretty bad, but right now it's probably the worst I've ever seen in the more than 30 years I've spent researching and writing about real estate in Australia. It's just dreadful. They're basically taking Sydney's situation and turning it into some kind of national crisis. They're telling us, headlines are telling us every day that prices are falling across Australia. It simply isn't true. I keep telling you that. I'm going to keep telling you until the message gets through. There's lots of strong markets around Australia, growth markets, places in regional Australia, for example, that aren't getting any attention from media because they're obsessing over the two biggest cities and ignoring even the smaller capital cities, but totally ignoring regional Australia. And that's where a lot of the growth is at the moment. Regional New South Wales, we did a town by town, suburb by suburb analysis of what's going on in regional Australia to see what's happening with sales, demand and prices. And we found that we focused on markets with more than 30 annual sales. There were 303 locations, towns or suburbs of major cities like, say, Newcastle, for example. And of the 303, 85% of them have had price growth in the last 12 months, and many of them have had growth above 5%, some above 10%, and there's a list of about a dozen places where the median price growth in those locations in regional New South Wales have been above 20%. Very hard to find locations where prices are down in any meaningful way. There's only 11 locations right across regional New South Wales where prices are down by 5% or more. But there are literally hundreds where prices are up. So throw that out there. The new New South Wales regional hotspots, top 5 regional New South Wales is out there. You can get it from the hotspotting website. Go to the website, click on investor reports, and you'll find it listed there. Okay, so questions are coming through. Let's turn our attention to that. Janet is asking a good question. Janet, you're asking about the recent flooding in Townsville. Will it affect housing prices down the track? I know that you've been keen on Townsville, Janet says. Well, you're right, I have been and I still am. Look, the first point I would make is this. If we we've got a checklist of places where we might buy around Australia. If we crossed off all the places that have ever been afflicted by drought, flood, cyclone, bushfires, some kind of natural disaster, there wouldn't be many places in Australia left. We are the land of the natural disaster. Townsville's recently been whacked in an unprecedented downpour causing flooding. But it's important to note that, look, I'm not minimising the suffering in Townsville. Lives were lost. People have been displaced. There's been enormous inconvenience and suffering as a result of it. But the reality is that the vast majority of houses in Townsville weren't affected by the flooding, relatively few in terms of percentage of the total. That's the first point to keep in mind. Secondly, the recovery effort, as always happens when an area has a natural disaster visited upon it, the recovery effort actually creates something of a mini economic boom. And so there will be money poured in by the state government, federal government, the local council, local businesses. Jobs will be created from that. And there will be, kind of ironically perhaps, indirectly benefit to the housing market. So I really don't think that certainly long-term Townsville is going to be adversely affected by it. Brisbane in 2011 had floods. Lots of locations around Australia have suffered from, Canberra in the past has suffered from bushfires. Right now, one of the strongest markets in capital city Australia. So Townsville will recover from this and move forward. The important thing is that there's massive amounts of investment going into Townsville, over $25 billion worth of spending on infrastructure and property development. So I think Townsville can and will recover from this and move forward. I think anyone thinking of buying there just needs to check the flood maps, which will probably be rewritten because the recent floods were, almost unprecedented. The downpour was just extraordinary. But I think you can be confident that any area of Townsville that wasn't flooded in the recent downpour is pretty safe, because that was the flood to end all floods. That was the downpour that the like of which has never been seen before in Townsville, I think. And so any location, which is most of Townsville, that wasn't flooded, you're pretty safe behind there, I think. Okay, Emil, you're saying I built a four bedroom, 2-bathroom, 2-garage in Newport, Queensland, on the Redcliffe Peninsula. What are your thoughts on the area going forward? Okay, there's a couple of different things there. You say, I noticed Brizzy has slowed down according to media releases. It's hard to know about Redcliffe, Moreton Bay region specifically. Firstly, I would say, disregard what you're reading in the press about Brisbane prices. One of the big problems amongst many in terms of media coverage of residential properties, they generalise. They talk about Australian housing prices are down 5% in the last 12 months, for example. What the hell does that mean? Australian housing prices, we've got all these vast regional differences. Some locations rising strongly, some locations rising moderately, some stagnating, some falling a little, some falling a lot. To generalise about Australian property prices is ludicrous. The only people stupid enough to do it are economists and journalists, but that's what they do. Now, they also generalise about individual cities. A city as big as Brisbane doesn't have just one situation happening. So figures from one source might say the median Brisbane house prices have risen only 1%. Another source may say 3%. Another source may say Brisbane house prices are down 1%. It's a gross generalisation, and it doesn't captivate all the different local scenarios that are playing out. I know from the suburb by suburb analysis that we do every quarter for a retown and suburban location in Australia, that there's lots of stronger areas of the Brisbane market in those generalised figures. And one case in point is the area that you're talking about, Emil, the Redcliffe Peninsula and the Moreton Bay region generally. This is a market where this is probably the busiest market in the Brisbane metropolitan area right now. Lots of demand. Affordability is one factor. Good infrastructure is another. On the Redcliffe Peninsula, the opening of rail links to central Brisbane about 2 years ago has been a factor. I think the Redcliffe Peninsula has got lots of growth potential. It's affordable bayside living. As the name suggests, peninsula, it's almost totally surrounded by water. Most of the suburbs on the Redcliffe Peninsula have median house prices in the 400,000, so it's great value for money. Another one, you're talking about Newport, that's a little bit more upmarket and a little bit more expensive, but nevertheless, this is a good market to consider, particularly with the rail links, and then Moreton Bay region generally. Affordable, good infrastructure, close to major jobs nodes. We're always remembering that most people don't work in the CBD of Brisbane, they work in suburban jobs nodes. And one of the biggest is the Australian Trade Coast, which surrounds the Brisbane Airport, domestic and international, and the Brisbane Seaport, which are quite close to one another. There's a massive commercial industrial area all around there called the Australian Trade Coast, and it's the biggest jobs node in the Brisbane metropolitan area, and it's very close to the part of Brisbane that you're talking about. So good potential there. Disregard the media and focus on what's happening locally, and it's mostly positive for that area. Karen, flip Renault market future for Noosa and surrounds, Karen is asking. Look, I don't know whether that area particularly has potential for Renaults and flippings, but I can just tell you about the Noosa market generally. Right now, the strongest property market in Queensland is the Sunshine Coast, and the strongest part of the Sunshine Coast market right now in terms of price growth in the last 12 months is the Noosa precinct. So we've got Noosa Heads, we've got Noosaville, we've got Tewantin, we've got Sunrise Beach and Sunshine Beach. Most of them are upmarket. Tewantin's a bit cheaper, a lot cheaper in fact, but most of them are upmarket areas with high prices. But that's where there's we've seen most of those suburbs, both unit markets and housing markets, up 15%, 20%, more than 20%, some of them, in terms of median prices in the last 12 months. So there's a lot of growth happening there at the moment. I think a lot of it's coming from the infrastructure spend that's transforming the Sunshine Coast economy. We have seen, for example, a whole new medical precinct created, a whole new industry for the Sunshine Coast. $2 billion hospital, beside it a private hospital, specialist medical clinics have also been built. It's just a whole precinct, a whole industry that didn't exist before. Many of the people who work there are getting paid pretty good money, and they are new to the Sunshine Coast. They've come from other parts of Australia, some of them from other parts of the world, to live and work on the Sunshine Coast, and are buying, and some of them at least are buying real estate at the prestige end of the market, and Noosa is being boosted by that. But I can't really comment on the potential there for renovations. I'm sure those opportunities exist. But all I can tell you is that market is strong and rising at the moment, as is the Sunshine Coast generally. Now, Anne, your comment or question, all the media just love to give the Perth property market doom and gloom, especially CoreLogic. Yeah, well, a very valid comment, Anne, and I can understand your frustration with that, and also the source of that, which is CoreLogic. For some reason, media thinks that the only figures worth quoting are CoreLogic figures. I mean, we've got other major reputable big name sources out there who have different figures, quite often contradicting the CoreLogic rubbish. Major entities like realestate.com.au, the biggest website for residential property in Australia. We've got Domain, we've got SQM Research, which is a really good source of good data for real estate investors. That's the business of Louis Christopher, probably Australia's most experienced and credible residential real estate analyst. Present company accepted, of course. We've also got the real estate institutes who pump out data. So we've got 5 or 6 major sources, but constantly we get fed what CoreLogic says. Why? Well, partly because they have a nice, cosy commercial relationship with some of the media outlets, but mostly because their figures are the most negative out there, and media just loves negative sensation. Anything negative about real estate is just plastered all over our major newspapers and other mainstream media outlets. But if there's anything positive to be said, they're not interested in publishing it. And I know this week there's been really positive data being made available on land prices. Land prices, residential allotment prices, are rising in most of the major markets of Australia right now. Now, we got the press release from the source of that information. We check media every day to see what's been written. No one's published that information. Why? Because it's a positive and they're only interested in negatives. We've also seen very positive information in the last week or so from a number of sources on the fact that vacancies are falling in most markets and rents are rising. So that's a positive for property investors. We've seen the raw data, the press release information that's come out, but almost nobody in mainstream media has published that information because it's positive and they're not interested. They're only going to be interested if it's negative, and there are just so many, the usual suspects keep popping up. You see the same bylines on these supremely sensationally negative stories about real estate, most of them dishonest or just plain ignorant. They just don't understand what they're writing about. They don't care. They're just interested in a clickbait headline. As I say, the same usual suspects, their bylines keep appearing on this nonsense, but that's what we're getting there. Perth, and unfortunately, is being hammered. CoreLogic's figures continue to be negative on Perth, but figures from other sources are much more positive. What I know to be true, because we look at all the data from all the sources and we analyse it. We talk to people on the ground. We talk to valuers, buyers agents, people who are in the market at the coalface and can give an independent viewpoint, not tainted by vested interest. And what we know to be true is that vacancies have dropped a lot in Perth. Rents are starting to rise. We know that sales activity has been rising strongly for the last year or so, and that some sections of the markets are now starting to have prices rising, particularly the top end. So there's a lot of positive things happening in the Perth market, which is underpinned by an economy, a state economy that's recovering and starting to improve and create jobs again. So if media chose, they could be writing a lot of positive things about the Perth market, but they're just not interested in it. That their mentality is sad. It's kind of worrying. As I often say, you've got the old analogy about the glass half full and the glass half empty. The glass is never half full for a journalist in Australia, but nor is it half empty. For journalists, most journalists, it's completely empty. It's always a crisis, no matter what the figures are doing. If prices are rising, that's a crisis. If prices are falling, that's a crisis. If affordability is worsening, it's a crisis. If affordability is improving, that's also a crisis because it's caused by falling prices, apparently. You just can't win. But if you had a friend or family member who had that kind of just persistently, continually, obsessively negative outlook that most journalists have, you'd be urging them to seek help from a mental health professional. I think they're a bit of a worry. We should ignore them all and stop buying their products, as far as I'm concerned. Emil, who I spoke to recently in this broadcast about the Redcliffe Peninsula, says, thank you. Thanks for your thank you, Emil. Appreciate your thank you. Sally, Sally Witherspoon. That's a familiar name. Talking about rural acreage lifestyle block. Can't give it away. 50 k's from Toowoomba and Gatton. Any chance of change in the next 2 years? Yeah, not quite sure exactly the location, but yeah. Need to know a bit more, I think, Sally, before I could comment. Look, Toowoomba is a market that's been strong in the past. It went through a pretty good period, maybe 3 or 4 or 5 years ago. Just lately, it's been kind of stagnating. It's a very strong city, strong economy, but the property market hasn't been pumping, probably partly, at least due to oversupply. Now, it always happens that when you get a regional centre like Toowoomba, Gladstone is a grand case in point where there's media about it being a boom market. Developers pile in and build too much and it kills the boom, and suddenly we have the opposite happening, caused by oversupply. I think Toowoomba's had a bit of that. But you're talking about acreage which is not in Toowoomba, but somewhere in that general area. Well, the general area, the Surat Basin, the Western Downs, that economy has been a little bit down. I think it's starting to come back. The previous surge was caused by the resources sector, coal and coal seam gas, and then that went into abeyance. And there are signs of it now starting to come back, for better or for worse. Environmentally worse, but economically maybe for better. Depends on your viewpoint. But difficult to comment on the specific property or location because I'm not quite sure what you're talking about. Emil again, what percentage should a unit median be versus a housing median in a suburb? Is there a sweet spot? Yeah. Like, I don't think you can really work it like that, Emil. Quite often, in many places you find the median price for apartments is made roughly half that for houses, but in other cases it's 75%. It varies according to location, and you can't really apply a formula to it because it depends on the location. In some locations, the differential between prices for apartments and houses is less because it's a market where apartment style living is particularly in demand. So, yeah, I've often thought about, the question that you've raised, Emil. I've often thought about that myself. Is there kind of a benchmark? Is there a median where apartment value should be approximately half or 75% housing? And I realise, looking as we do every quarter, suburb by suburb, town by town, and we notice that there's no real commonality. There's lots of disparity, and it all relates to the local location. Some location where houses are strongly favoured over apartments, others where apartments are strong because maybe it's seaside or it's, for affordability reasons. One thing I can tell you, a phenomenon we noticed last time we did Sydney suburb by suburb, is that there are many, many suburbs in Sydney where median house prices are down, but median apartment prices are up. You're not going to hear about that in media because, hey, that's kind of a positive, isn't it? Something positive happening in the Sydney market. Who could possibly be interested in that? Well, I think that's a very interesting phenomenon because it was in suburb after suburb after suburb. Median house price down maybe 8 or 10%, median apartment price up by a similar amount. And what that suggests is that what we believe to be true is that the Sydney boom peaked and started to trend down because of the affordability issue at all sectors of the market. We hit a price fall. People just said, no, I'm not prepared to pay higher and higher prices in this market. And so people started to back off and demand started to reduce. And so the price growth started to dissipate and then prices started to fall. But people have got out of the more expensive housing market and are targeting the more affordable product, which is apartments in the same location. So in many suburbs, median prices are dropping. Apartment prices, according to the medians at least, are rising. Not in all suburbs in Sydney, but in quite a few. What are the range of data sources you use? That's a question from Arjun. Look, we use any source we can get our hands on. We do a certain amount of original research which we create ourselves, but a lot of what we do is analysing what's already there. There's no point in reinventing the wheel. There's a lot of information out there, and we pull it in from wherever we find it, and we analyse and try to make sense of it, which isn't always easy because if you get price data on, say, the Melbourne market from 6 different major big name, supposedly reputable sources, you're going to get 6 different figures and quite contradictory. CoreLogic, as always, is the most negative one. They reckon Melbourne house prices are down 10%, but everyone else disagrees with that. Most sources reckon Melbourne prices are down maybe 3% overall as a generalisation because the parts of the Melbourne market are still rising, particularly the cheaper parts. So we get data from all the sources. We try to make sense of it. So there's, as I mentioned earlier, there's obviously CoreLogic, but there's also realestate.com.au, there's Domain, there's SQM Research, there's the Australian Bureau of Statistics, there's the Real Estate Institute also publishing data on rents and prices. We get a lot of background population demographic information from .id, which call themselves the population expert. They have lots of good information about local areas and what's happening with population and building approvals and things like that. Local council websites are a good source of information. The major websites listing property for sales are producing good analysis of what's happening in markets like realestate.com and Domain. There's a lot. One that I do like is SQM Research. It's, as I mentioned earlier, Louis Christopher, very experienced and respected real estate analyst. His figures on what's happening with prices are quite different to those from CoreLogic, and I think are more credible. He also has good information on rentals, on vacancies, on you can go to that website for free. You can key in a postcode and find out what's happening with vacancies. You'll see a chart showing what's happening with vacancy rates in that area or any area that you choose for the last, I don't know, 5, 6 or more years. There's got also information about population and demographics, how much property is on the market, all sorts of useful stuff. I mean, that's a really good one to tune into. We certainly use it a lot, and we always credit them as the source of the information because that's the right way to do it, but deserves to be on your list of places to go to find out what's going on. Okay, moving on. So Sally's come back. Yes, the acreage you're talking about, Sally, is 50 k's from Gatton, the eastern side of the New England Highway, 160 acres. And Sally asked, does anybody want it? Pristine bush with views, wildlife, free of charge. Sounds great. Someone out there is going to absolutely love that opportunity, depending on what it costs, of course. There was a time in the not too distant past when I had 33 acres just outside Mulaney where I live, and it was great. 33 acres of forest, great lifestyle. 160 acres, that's really something. Someone out there will be interested in that. If anybody is interested in 160 acres of pristine bush with views and wildlife free of charge, you don't often get your wildlife for free. Contact me, Ryder at hotspotting.com.au, and I will do my best to put you in touch with Sally, who appears to have that rather exclusive offering for sale. Not what we normally do, but why not? Why not? Yeah, I mean, I think it's a sort of lifestyle that a lot of people dream about, isn't it? Most of Australians live in big cities, and many of them probably wish they don't because it's busy and it's expensive and it's congested, but that's probably where they feel their career is, and that's where they have to be. I made a decision a quarter of a century ago that I didn't need to be in a city to do it. I don't know, moved to the country, and highly recommend it. Lifestyle. Bernard Salt, the very well-known demographic expert who's written books and has a column in the Australian, and a very well-known public speaker. I remember him doing a social media post one day saying he'd met a guy who lived in a sea change location. He said, this guy is living the quintessential Australian dream, owning your own business, being self-employed in a iconic lifestyle location. And I thought, hey, he's describing me. That's exactly what I'm doing, owning and running my own business in an iconic lifestyle location. He was talking about a guy who was in a sea change place. I'm in hill change, but it's all the same thing. Get out of the city if you can. Go and live in a smaller town where there's real community, where there are no traffic lights, where you can get a park in the main street, and people know their neighbours, and communities are a priceless thing. I live in Mulaney, in the Sunshine Coast hinterland, and it's just a great community to be in. I'll probably never leave. So what Sally's got on offer is a big acreage opportunity, and there's a lot to recommend it if you can break the shackles from the city. Joel, what are your thoughts on capital growth prospects for the future for the better Logan City suburbs? Logan City, the southern part of the Brisbane metropolitan area, it sort of bridges the the urban gap between central Brisbane and the Gold Coast. And for that reason, it's worth considering because it's a very strategic location. The Gold Coast and Brisbane are interlinked by the big motorway, the Pacific Motorway, the M1, I guess, and also rail links. And so they run through Logan City. So in addition to that major motorway, we've also got the Logan Motorway, which kind of heads off to the west, and you've also got the Gateway Motorway, which kind of bypasses around central Brisbane, taking you north towards the Sunshine Coast. So you've got three major motorways intersect there. So transport links are great, very affordable, lots of suburbs with median house prices in the 300,000s, big retail offering, lots of schools, all the things people need. And it's got great potential now. More and more, two things that are happening, two trends. People are leaving Sydney because it's so expensive, and they're heading to places like Southeast Queensland because it's more affordable and a more relaxed lifestyle. And the affordability comparison coming out of Sydney, where median prices for suburbs, even in the most far-flung outskirts, nothing under 600,000, whereas in Logan City, many suburbs with good infrastructure, 300,000, better ones 400,000. Why not? And for investors, buying at those prices with much better rental yields than you get in the bigger cities, good prospects for growth. So I think there's potential there. I think it's important, Joel, to remember there's different parts of Logan City. You got newer areas which have future potential, but don't have much in the way of infrastructure at the moment. Whereas the older suburbs, which are clinging to the transport spine formed by the motorway and the rail links. So you want to be pretty close to that, and where the infrastructure is the schools and the golf courses and the recreational facilities and the big retail offering that tends to line the motorway. So keep that in mind if you're thinking about Logan City, but I think it's got good potentials. Karen's asking thoughts on property prices future in Gladstone. Well, sooner or later, Gladstone will recover. It's inevitable. I mean, it's been through downturns before. It's a bit of a boom bust sort of a place because it's so strongly linked to the resources sector, and it tends to get investors and developers piling in there when there's a boom on, and they create an oversupply, so they kill the boom. And that's what happened last time. And the oversupply was so severe that it's been 3 or 4 years in downturn, and still prices are down. But the signs are glimmers of signals that recovery may be not too far off. Vacancies certainly have dropped a lot. They were above 10% at one point, and steadily over the last, say, 18 months, they've been coming down. They're now, I think last time I checked, around 3%, so that's an acceptable level. So we now got the conditions where maybe rents can start to rise again. There's a few suburbs where median price has risen a bit in the last 12 months, but most locations in Gladstone are still down. But Gladstone is a very strong regional city. It's got a major export port. It's like the industrial capital of certainly of Queensland, some might say of Australia, and soon from a certain viewpoint. So it's got a long-term future. The only thing that's wrong with Gladstone as a property market is that developers just went crazy and massively oversupplied it, and it's taking a long time to recover, but it will. Maybe later this year we'll start to see signs of price growth, given that vacancies are now down. So Emil, some feedback, agreeing with, what did I say? What was I talking about there, Emil? Yeah, about apartments versus houses. Hope you don't mind me asking you a few questions. No, the more the merrier, Emil. Keep asking away. You say you didn't know I did Q&A live. Thanks for your feedback. I do this on a Wednesday night once a month. It's not always the same Wednesday night. It has to fit into my schedule of other things, but usually around the middle of the month, a Wednesday evening, 6:30 Queensland time, 7:30 in the eastern states that have daylight saving, not for much longer. I'm just available for 60 minutes or 90 minutes to answer whatever questions are thrown at me, if I can. Righto. Emil, the conspiracy theorist in me tells me that the guys behind the media are making people write negative so more people sell. Middle class losers valuing their homes, more people panicking, selling, eventually sell them. Yeah, I really don't think that there's any conspiracy happening. The only conspiracy really is that the name of the game for media is clickbait. They want people to click on things so they can say to advertisers, hey, look, lots of people are clicking on our stories. And they think that the best way to get people to do that is to have sensational negatives all the time. I think they're wrong, particularly in the real estate space. What people want, and I know this to be true because I have lots of contact with real estate consumers around Australia, what they want is good information so they can make good choices, good decisions, so they can buy and sell at the right times in the right places wisely and do okay financially. They want good information. They're not getting it from media. I mean, all they're getting from media, mainstream media, is misinformation. They're getting sensational negatives. They're getting lies. They're getting fabrications. I don't think there's any major conspiracy behind it. A lot of it's driven by the individuals writing the articles. It used to be in media that there were checks and balances. A lot of those checks and balances aren't there anymore. There used to be a whole bank of people called sub-editors who checked the work of journalists, the writers of articles, and made sure that what they wrote was accurate and fair and balanced and didn't have typographical errors and spelling mistakes, all that sort of thing. And in many cases, in major media outlets, they don't exist anymore. There's no checks and balances. You can get a 19-year-old cadet journalist write something about which they know nothing, like residential property, for example, and it just goes bang, online. It's there and treated by a lot of people as fact. And quite often it's just errant nonsense. And it's quite clear that the person writing the article knows nothing about the subject. They've been exploited by somebody who's sent out in a press release, and what they're regurgitating is just rubbish. Statistical errors pumped out of someone's computer, like CoreLogic, for example. There was an article published on the News Limited outlets, News Limited publishes the Australian, the Courier Mail, etc., written by a journalist who should have known better. It came from CoreLogic. Here's the locations around Brisbane with the highest price growth. That's the way it was portrayed. But the list was rubbish. It was caused by small sales samples, statistical aberrations caused by very tiny. There was one location on the list. They said that South Brisbane houses values had risen 25% in the last 12 months. Well, there are no houses in South Brisbane. I don't know how they came up with a median price or a growth figure for South Brisbane houses, because there aren't any. It's a location on the doorstep of the city where it's all infrastructure and entertainment complexes and parking buildings, cafes, restaurants, hotels, high-rise apartments certainly, but no houses. So it was bunkum, absolute bunkum. The person regurgitating the press release, because that's what most journalists do these days, they don't actually write researched original articles the way journalists used to. The person regurgitating this press release didn't know enough to know that it was rubbish and made a fool of themselves and their publication in front of anyone who actually knows that, for example, there are no houses in South Brisbane, but there were lots of entries on that list of similar ilk. But it's really incompetence and bad ethics, lack of integrity by the journalist and the publication. That's the problem. I don't think it's a conspiracy. Okay, Charles. Is there a hold on land release in Ipswich? Look, I'm really not sure what you're driving at there, Charles. Are you talking about well, I think you're referring to that there's been a number of people in the Ipswich City Council, including the former mayor, who have been charged with some serious offences which imply, corruption. And those, as far as I know, those charges are still to be heard and resolved. I think you're implying that because of that problem in the council, that it's slowing down the release of land. I really don't know if that's true or not, Charles. I'm not sure whether that's going on. There's certainly there's ample land for development in Ipswich City. It's one of the reasons why it's a growth, population sense, it's a growth market. It's also very affordable. It's got good infrastructure, lots of jobs nodes. It's certainly one to consider. There's still plenty of houses being built and land being developed. In the Ripley area, for example, Springfield and Springfield Lakes is another example. So things are still happening there, and one worth considering. Joel, your question relates to the Queensland regional city of Mackay. Good for you. I like talking about Mackay. It's a good example of a number of things. It's saying some recent commentary has said that Mackay is looking good for growth. What are your thoughts? Well, there's no doubt that Mackay is growing again. It's one of those places that, because of its the impact from the resources sector, had a bit of a boom, and then it had a downturn. Not as severe as places like Gladstone or Emerald or the coal mining town of Moranbah, but it did go down. Vacancies went high, and but in the last 12 months it's started to recover. Vacancies are down to acceptable levels, rents are rising again, sales activity's picked up, and we're seeing prices rising at quite healthy levels in Mackay. It's actually probably the market leader in terms of those central Queensland locations that are hooked into the resources sector in some way and had downturns. A number of them are now showing signs of recovery. Emerald is, Moranbah is, from a very, very low base. Rockhampton showing signs of recovery, but the one that's ahead of the pack is Mackay. So right now, it's looking quite good. Mackay is not just about the resources sector. It's got a big agricultural sector, sugar and other things. It's got a big tourism sector. It's got an export port. It's got a few things going on. It's a good place. And but you've got to remember that because it is impacted by the resources sector, it does tend to be volatile, and the peaks and troughs, more so than a different kind of regional city or a city suburb. So you've got to always keep that in mind, that you can buy there now and you might get some growth for a while, but there will be future downturns, and Gladstone's an extreme example of that right now. Okay, Leanne. Leanne, you're currently renting a beautiful 2-acre property in Mulaney. Well, good for you. You've certainly chosen a good place to move to. And you're 50 in position to buy my forever home in the area, but not sure whether to buy now. I'll just keep watching the market for another year. Leanne, if you're in a position to buy now, I'd be inclined to do so now. I don't see any reason why. Mulaney is where I live. Let me be clear. I didn't buy in Mulaney. I bought here 25 years ago. I love it, and I probably will always live here. I didn't buy it because I thought it was a hot spot. I bought because I thought it had a great lifestyle, a great place to live, a great place to raise kids, which is something that we've done. The kids are now off at university. Not a hot spot. I don't think it's ever going to be a boom market, but it's certainly a very popular market. A lot of people retire here. It used to be a bit of a hippie town, quarter of a century ago, and it gradually evolved into more kind of a middle class retirement enclave almost. So I don't think for that reason it's ever going to be a boom market, but I don't see any reason why it's going to decline either. It's influenced mostly by the Sunshine Coast. The Sunshine Coast has become a very strong regional economy, and the property market on the Sunshine Coast right now is strong, the strongest in Queensland, I believe. It's rising, and I think it's going to continue to. I think it's at the beginning of something that's going to be long term. Used to be just like a tourism economy, and that tourism economy is always fragile. Property markets based on tourism economy seldom show good, sustained long-term growth. Sunshine Coast is different now. It's got the new medical precinct. It's got a lot being spent on infrastructure. It's evolving into something, a real regional city with strength and importance in the overall scheme of things for Australia. Mulaney's a lifestyle segment of that market, and I think it's going to be very solid So if you sort of wait, I can't be certain. You can never be certain with real estate, but I think if you wait a year, you probably find that prices are going to be higher than they are now. And if you're able to buy now, then you probably should do so. But you don't need to be in a hurry. There's no need to panic and rush out and buy something. If you're new to the area, and I think you are, take your time and look around and talk to people and get to know the area. When you find something that you really love, check it out, do your research, check out recent sales, and get an idea for values, and buy something that you just love and are going to be happy to live in long term. I think you're going to like the lifestyle in this part of the world. It's a great community. It's got a lot to offer. And yeah, start working towards buying now, I'd suggest, but take your time and look around. Emil, again, more the merrier, Emil. Ask as many questions as you like. We're commenting on many research companies. You say CoreLogic is awful. It was the same as the list of median prices that came out of Sydney suburbs, which had the biggest losses. They had Box Hill, a 25% loss. What they didn't mention was this time last year, the entire suburb with acreage at over $1 million in acreage, where sales in the past 12 months have all been subdivided lots, small homes. Yeah, well, I understand what you're saying, Emil. Those kind of aberrations happen all the time with median price data. That's why you've got to be very careful with them. The research companies just don't care enough about cleaning up the data. They don't clean it up at all. They just spit it out of computer, rush it off to media. They don't care if media gives them free publicity. What the hell? So they don't care about the accuracy or integrity of the data. They should, but they don't. So you get nonsense like what the example you raised there with Box Hill. There's lots of examples like that where the reason for the change in median price, whether up and down, isn't because values are rising to that degree or falling to that degree. There's all sorts of reasons why. Sometimes it's just a small sales sample. If you've got fewer than 30 sales in a year in a location, median price is going to be really unreliable. If you only got 7 or 8 sales, the median price is meaningless. It's rubbish. And yet companies like CoreLogic spit it out in their lists, rush it off to in a form of a press release, and gullible journalists who don't care enough or don't know any better will publish it as credible information. And it's just statistical nonsense. And we deserve better as consumers. We deserve better, and we shouldn't put up with it. Stop buying newspaper is my best advice to you. If you want to be informed as real estate consumers, the first thing you got to do is stop buying bloody newspapers. All you're doing if you're reading newspapers every day is filling your heads with negativity and misinformation, particularly about the real estate market. There are other better ways to be informed. If you'd like to know what some of them are, give me a call or drop me an email, ryder@hotspotting.com.au. I'm happy to give you some ideas. Right now out there, a lot of real estate consumers are doing nothing because they're scared, because they keep reading in media that prices are down everywhere. It's simply not true, and they're missing great opportunities to buy well in markets that are rising with great potential for future growth. People should know better, but unfortunately they don't. Okay, Nikki, late to the party? Well, we've almost been going an hour. God, time flies when you're talking non-stop, doesn't it? Hope it's making some sense to you out there. Nikki's asking, is it too late to share your thoughts on the Central Highlands, Queensland? Seems to be saturated with mid-range properties. House prices increased last year and people got excited. Yeah, well, look, Central Highlands, I think you're talking primarily about Emerald, I think. Hopefully I'm correct there. Emerald is one of those markets that went for a boom, links to the resources sector, etc. Bowen Basin nearby, Galilee Basin not far away. And then because the resources boom stopped, Emerald found itself, like other places, with a bit of an oversupply, and prices and rents fell. But it's on the way back. We're starting to see the number of sales rising, and as a consequence of that, we're starting to see prices rising again. They've still got a way to go before they get back to those former boom time levels, but the market's now heading in the right direction, and it's probably going to keep going that way because the resources sector is definitely revitalising. Unfortunately, from my personal viewpoint, a lot of it's connected with coal and I just wish they'd leave the coal in the ground. But nevertheless, that's what the economy in many of these areas is based on. And as that industry is revitalising and projects are cranking up again or expanding and jobs are being created, real estate markets in places like Emerald are starting to rise again. I would say maybe you own property there already, Nikki, and so you'll be happy about that trend. But if you're someone sitting on the sidelines thinking of buying there, just keep in mind that the sort of volatility we've seen in the last 5 or 6 years is going to be a long-term thing. In locations like this, it's always going to be volatile. There's going to be peaks and troughs. There's going to be periods where values are going to fall and people are going to suffer. So it's not for the faint-hearted. If you've got a good appetite for risk, then you can do it, but most people don't, and they can't sleep at night when they bought something for 500,000 and now it's worth 250,000. And things like that happened in markets like Emerald and Gladstone and Moranbah. So keep that in mind, whatever you're planning to do. Nikki, again, I bought in the Central Highlands in 2014, just before the boom went bust. And I fear my property's value will never return to the price I paid. Can you give me any hope? There is hope, Nikki. You've hung on for, you bought in 2014, so you've hung on for 5 years, and you've been through that period, that horrible period where what you own is worth less than you paid. You know, like a lot of people, you got the timing wrong. You're not Robinson Crusoe there. Many people did the same thing. But if you hang on this long, I'd hang in there, because there's no doubt that that the market is trending upwards again. While you're there, let me just key into my little database here, and I'll just give you the latest figures on Emerald. And hopefully there is some hope in these numbers, although okay. Now, these numbers will give you hope, I think, Nikki. According to these figures from one of the major research sources on price data, the median price for Emerald is now 310,000 after an increase in the last 12 months of 26%. Now, it's coming from a low base because it dropped down in the downturn. So it's now recovering from that low base, but a 26% rise in 12 months. And I've been seeing those sorts of figures coming through about Emerald. So I think those figures have some credibility. It means that the market's on the way back. Certainly we've noticed, because we chart the number of sales happening quarter by quarter, and we've noticed the upturn in the number of sales happening in Emerald. So demand is rising, the market's coming back, the median price has risen 26% in the last 12 months. So it's not going to keep rising at 26% a year, but it's definitely trending in the right direction. So if it rises for another 12 months, maybe you're starting to get back close to what you paid. And the other thing that will be happening is that, you know, vacancies have come down, so rentals are probably going to be rising, so you're probably going to get a better return, and it will start to be a lot more comfortable. The thing is, if you sell now, you're going to take a big loss probably, whereas if you hang on there for another 12 months, it's going to look a lot better. That's the way it's looking. I hope that's true, and I hope that's helpful and gives you a little bit of hope. Righto, Emil is asking, what are your thoughts on the federal election? Do you think it's wise to hold out and not buy until the election is done? I don't think so. A lot of people do that, Emil. They think, oh, there's an election, we can't make any decision until we know what's happened. Well, I don't really agree with that kind of thinking. Right now, you know, federal election outcomes can have an impact, but it's not a major impact. What you need to understand is that what happens with real estate markets is fundamentally a local thing. It's not a big national thing. We recently had a report from the Reserve, some people who work at the Reserve Bank, and they put out a thing saying the price boom in Australia was caused by low interest rates. And I thought, you idiots. I mean, seriously? How do you explain? I mean, apparently they think that the reason why prices rose as much as they did in Sydney and Melbourne because interest rates were so low. How do you explain the fact that prices didn't boom in Brisbane or in Canberra or in Adelaide, and why prices actually went backwards during that period in Perth and Darwin? And you know, the only places that really have had a boom are the two biggest cities. Now, if it's record low interest rates, why didn't we have a boom everywhere? Well, the answer is it wasn't record low interest rates. It was what's happening in those local economies. Low interest rates didn't hurt, but they weren't the prime cause. So it's not these big national things that impact on markets. It's what's happening at a local level. So people are concerned about the federal election. Labor looks like they'll win and they're going to change negative gearing provisions. Well, that doesn't mean real estate isn't worth investing. It just means there'll be a change of emphasis on maybe what you target. I mean, if you buy property in, say, right now, most of the strong growth markets in regional Australia, say Ballarat or Bendigo in Victoria or somewhere like Orange or Wagga Wagga in New South Wales, you're buying at a much lower price in the capital cities. The rental yields are much higher. Negative gearing becomes irrelevant because you're not negatively geared when you're buying in some of these places. You can buy in these markets, for a fraction of the price of the big cities. You can get rental returns above 6%, and you're borrowing at maybe something below 4%. So you've got a good opportunity. If you buy wisely and you maximise the deductions that are still available, like depreciation, for example, you can be cash flow neutral, cash flow positive, and negative gearing becomes irrelevant. So why do you care if Labor wins the election? It's irrelevant. The other thing about their policies about capital gains and negative gearing is that they've got to get it through the Senate, and there's been some surveys done taking into account the likely makeup of the Senate after the federal election, and the conclusion is that they're not going to be able to get those measures through the Senate. If they control the lower house, they might be able to win that vote, but not the Senate. And so they may have a policy about negative gearing, which is a ridiculous policy. It's not going to save, it's actually going to cost the federal budget money over time, not save it. It's not going to help affordability anyway, because negative gearing is not the issue. And it's just a piece of nonsense from Bill Shorten, and who knows whether it will happen or not. It won't happen if they can't get the votes they need in the Senate, and the research indicates they won't. So I wouldn't be too worried about it. It's about what's happening in the local economy. Where can you find a place to buy? It's affordable, strong, growing local economy, good prospects for growth, good rental yields. There's lots of places like that around Australia. As the smaller capital cities have opportunities, the better regional centres have opportunities. Focus on that and ignore the tune out from the federal election. It's just going to be a distraction. Real estate's a long-term thing anyway. I mean, if you're focused on the federal election and you're not going to take action because there's an impending election, then you're thinking short-term, and you should be thinking long-term if you understand anything about residential property investment. So ignore the election and just get on with it. Okay, Nikki saying thank you. I'll hang in there. Thanks for the in-depth response. Yeah, Nikki, I just think those recent figures are encouraging, and it's not just Emerald. There's that kind of comeback has been seen in other markets in regional Queensland impacted by the resources sector. So it's a bit of a trend. So hopefully it's all going to turn out okay for you in the end. Fiona, live in Perth and bought in Whyalla in 2012. Properties have gone down in price, which means we haven't been able to grow our portfolio. Are either of these areas likely to grow in the near future? Okay. So you're talking about Perth and Whyalla. Firstly, if you bought in Whyalla in 2012, you probably had a period where there was some growth before. Whyalla is a place in South Australia which is very much hooked into the resources sector. So like some of the places in Queensland we're talking about, it went down when the resources sector went into decline. Prior to that, Whyalla was actually the #1 growth market in South Australia, had great growth and good rental yields, and everything was strong. So you probably got a little bit of growth, Fiona, and then things went down. But the prospects are looking pretty good for Whyalla. It's on the way back. Similar to some of the comments I made about Emerald, we see the rise in sales. I'm still not back to those boom time levels of before, but certainly trending upwards. Vacancies are starting to come down, all those things that you hope would happen when you own real estate in a place. The big thing about Whyalla is that the UK billionaire, Mr. Gupta, has bought the major employing business, the steelworks, and is investing a lot of money, and it all looks very positive. If it all comes off, and there's no reason to believe that he doesn't know what he's doing, let's hope he does. There's lots of other positive things. I mean, that whole precinct, you've got Port Augusta, Whyalla, lots of investment happening in alternative energy projects, billions and billions of dollars being invested. The resources sector is coming back in that area. So, and you've got what's happening with the steelworks business and the associated mining operations now that Mr. Gupta is putting so much focus on it and investing in it. So I think if you bought in 2012, you didn't buy at the peak. It's not like you bought when prices were up here and now they're way down here and there's no hope of getting back up there. I think there's certainly hope for things to improve there. Perth's definitely recovering. You're not going to read about in the media because they're not interested in positive stories. CoreLogic keeps pumping out negative figures about Perth. I don't believe their figures because they're contradicted by most of the figures from other sources. There's no doubt in my mind that the Perth market is moving into a recovery phase after being down for the last, say, 4 years. It's going to be better in coming years. So there is hope for both those locations, Fiona. I know it's uncomfortable when you own properties in more than one place where the values are lower than what you paid or less than what you hoped. But I'm expecting to see growth in both those locations in coming years. Perth, I think, I'm telling people, is the city of opportunity because prices are down after 4 years of decline. Vacancies have dropped. Rents are starting to rise. Activity's picking up. We're starting to see price growth in the top end. Underlying economy is stronger than it was. Jobs are being created. It's all pointing in the right direction. So don't lose hope about either of those places, Fiona. Okay, so 7:35, we've been going for just over an hour. I'll just hang in there a little while longer, see whether there's any more questions to come through. But thanks for questions so far. It's actually been a great night with really good questions and really good comments and lots of diversity about topics and locations, and it's really enjoyable to engage with people sort of out there in different parts of Australia and have the conversation. Just while I'm just waiting to see whether there's some more questions to come through. Just want to talk a bit about an event we're planning here at Hotspotting. We're going to have some seminars in different parts of the country, starting with Brisbane, but we're not going to have a seminar where people sit in a room and have people like me present slide presentations and talk at you. We're going to have what we call the seminar with wheels, the mobile masterclass. We're going to put people in a bus and we're going to take them and show them stuff rather than sit them in a room and tell them stuff. We're going to actually take you out and show you what's good and bad about the Brisbane metropolitan area, its economy, infrastructure, property markets. So we're going to look at all sorts of different things, different areas. We're going to have this opportunity to spend a day with me and pick my brains about real estate issues. Also, we find in these events that people learn from each other, the participants on the bus. You've all got different range of experiences as property investors and as citizens of Australia, and you can learn from each other as well as from listening to people like myself, and we'll have other experts doing presentations. We start off at a breakfast venue, the presentation, we have a lunch venue, but also on the bus as we're travelling around looking at different areas of the Brisbane market, up market, middle market, down market, cheap areas where the infrastructure is being spent, because that's a big factor coming for Brisbane, where the jobs nodes are, because it's important to buy real estate that's proximate to where people work. All of those things we're going to take you out and show you for the day. So if you're interested in that kind of a concept, a lot of investors, according to the surveys, are very interested in Brisbane right now. They got the message. You can't really help but get the message that Sydney and Melbourne is no longer booming. And the question for a lot of investors is, where next? And the surveys indicate that top of mind for a lot of people in answering that question is Brisbane. Perth's also top of mind. The latest survey I saw had Perth and Brisbane sort of almost equal first in terms of the cities that people want to target for investment. So Brisbane is very much one that investors around the country are thinking about. Here's an opportunity to actually learn a lot about Brisbane by coming on the bus tour. It's on Saturday, 13th of April. So it's about 3.5 weeks away. And it's going to be a great day. And you'll go away with a great information pack, a new book written by a Brisbane real estate professional who will be part of the bus tour. He knows a lot about having been a real estate professional in Brisbane for a long time. Andrew Trim is the guy in question. He's going to be with us, and he's going to include in the information pack will be a free copy of his recently published book, which I think is one of the better real estate investment books that I've read. And who asked some questions earlier, saying I have a property also in Ipswich. Is there much growth happening there? Not really at the moment a lot, but I think there will be. Ipswich in the past has been a growth market. You know, it's like all markets. There's nowhere that's up all the time. There's also nowhere that's down all the time in terms of, you know, most reasonable markets. Ipswich's been through a period when it was actually a national leader on capital growth, you know, going back, you know, maybe 7, 8, 10 years. The last few years it's been in a bit of a lull, like most of Brisbane hasn't really done much, which has got the potential to be a big growth market again. It's the most affordable part of the Brisbane market. Lots of big jobs nodes out there, and more are being created. Some big things happening out there in terms of industry and events that are going to create lots of jobs. Transport links are good. There's lots of things in favour. So if you own property there, take a long-term view. You're going to get growth there over time. And I think in the next few years are going to be a lot better than the last few years. Kieran, and with reference to what I just said about the bus tour in Brisbane, are you thinking of a tour of the Sunshine Coast? Funny you should ask that, Kieran. We are. In fact, the plan is that the first one's going to be Brisbane, the second one's going to be the Sunshine Coast because, well, firstly, because I think the Sunshine Coast is a great example of a strong regional market that people should consider. And it happens to be local, so it's very convenient to do a tour there. But, you know, it's got all sorts of benefits. People from other parts of Australia might think, well, we might go and have a long weekend on the Sunshine Coast. Great place to have a weekend. Fantastic seaside location. Lots of good places to eat. Plenty of attractions to go and see. So you can combine that with a day on the bus with us going around the Sunshine Coast, which, as I said, is a great example of a regional growth market. And we're going to drive around and explain why the Sunshine Coast, because in the past, the Sunshine Coast has been a place that I haven't recommended, even though I've lived in the area. I've actually included in our no-go zones in the past, and actually I've been right about that. In those periods, prices actually fell. A lot has changed, and we want to drive around and explain why it's changed, why it's now a hotspot, not a no-go zone, and take you to the big infrastructure projects that have recently happened and are still happening and will happen, that have been responsible for this amazing transformation in this market, and take you to places like Noosa, where right now prices are rising at a rate of 15 or 20% a year. So one of the growth markets of Australia right now. You're not reading it about in the media because, as I said, media is not interested in positive stories, but this is really a very strong growth market. So the second, Kieran, the second bus tour we plan will be on the Sunshine Coast probably in June, but we haven't finalised that as yet. But if you're on our mailing list, I think you are, we'll let you know just as soon as we have it planned. Okay. Yes, Nikki, you're referring to Sally. Sorry, I overlooked that question, Sally. I thought you're still banging on about the acreage property, but no, you have a different question. Bought a home in Toowoomba 2016 for $370,000, currently doing renovations. Cautious not to overinvest. Predictions for the next 2 years at Toowoomba. Look, I really like Toowoomba. It's one of those regional centres that I think people should be aware of because it's, you know, it's got a diverse economy. It's got a strong economy. like anywhere else, it goes through periods when the market's not booming. That happens everywhere. It's had boom periods in the past. It will do again. There's still plenty of money being invested in the area. We've got the second range crossing, for example. The new airport recently completed is going to have an ongoing impact. As the resources sector continues its recovery, Toowoomba is going to benefit from that because there's a lot of resources activity out there in the Surat Basin nearby, and the entry point for a lot of people, that new airport, you fly into Toowoomba. So that brings a lot of activity, traffic and spending into Toowoomba. So I think it's got a very good future. The inland rail, and that's something that I think more investors should be aware of. We just published this week our new edition of Top 5 Regional New South Wales Hotspots. And one of the locations I've included, normally you have to buy the report to find out this information, but we've included Parkes. Parkes is a good place, solid town, strategically located, but its importance is going to go to another level when the inland rail link is built. Work's already underway. It's a happening thing, and it's going to go through Parkes. That's decided. So Parkes is going to be very important. It's going to also go through Toowoomba. That's going to help Toowoomba as an economy and therefore its property market. So I think you're wise not to overinvest with renovations. A lot of people make that mistake in any market. It doesn't matter where you're in a boom market. If you spend too much on your renovation, you're going to blow your budget. You're not going to make the profit that you set out to achieve. So it's wise in any situation, Sally, to be very, very careful about that. I think there's hope that in 2 years' time, Toowoomba market's going to be a little bit higher than it is right now. Cheryl, your question: what impact do you think the new marina development will have on the Pelican Waters market? Look, well, it won't hurt. I don't think that in itself is going to be dramatic. I think what's important, for Pelican Waters and for all the suburbs of Sunshine Coast is the broader picture for the Sunshine Coast, much more so than an individual marina development. It's the underlying economy. It's always about the underlying economy. I think that's the take-home message for today and every other day. It's about the underlying local economy, and in terms of the Sunshine Coast, that's a very strong story. And so Pelican Waters is just one of those suburbs which may benefit from that. And since we're talking about it, I'm going to key it in here and see whether it tells us anything useful about. Okay. So what the numbers that have come up about Pelican Waters are telling us, Cheryl, is that the median house price is $760,000. That's an increase of 6% in the last 12 months. And in terms of the unit market, median price $465,000. It's up about 5% in the last 12 months. So yeah, it's showing solid growth already. And I think that, it's the Sunshine Coast market, locations like that are at the beginning of a long-term trend of doing better than they have in the past. So, but the new marina development's not going to hurt, but it's not in itself going to be a huge driver that's going to make that market outperform all the others. Okay, so any other questions out there? I'll just hang on a little while longer. Just let me finish my dissertation on the upcoming bus tour. It's a seminar with a difference, a masterclass with a difference. I think one of the lasting memories I have is when I was quite young, a very famous former international footballer came to our town and was doing a coaching session. I remember what he told us about learning things. And he said that here's the mantra to remember. I hear, I forget. I see, I remember. I do, I understand. That's an important lesson about learning. And so that's the philosophy we bring to this bus tour. We're not going to sit you in rows and talk at you because you hear stuff, you kind of forget about it. We're actually going to take you out and show you, and so you can touch it and feel it. And you're more likely to remember it and learn it and understand it, and it will be great background information. It's not necessarily about buying specifically in Brisbane, but about property investment generally. It's a great learning curve packed into one day, which is a lot of fun. Include some good food, good company, a range of experts driving around looking at different types of markets and different types of developments. And we're not going to try and sell you anything specifically, not that. We're not going to take you somewhere where property is for sale and suggest you buy it. People are not interested in that. We're just going to take you out and show you examples of markets of different sorts. We're going to take you to the Redcliffe Peninsula, for example, which is a market that's going to another level as like a affordable sea change type location, where the appeal has been increased by the opening of new rail links to central Brisbane, that kind of thing. And look at some of the numbers, stop outside individual properties and look at the sales history and see what the growth's been in some of these locations. Look at small developments that investors can do, such as splitter block developments, where you can buy a property that can be subdivided and a second or third dwelling built, and accelerate the investment profit process in that way. So all sorts of learnings will happen on that bus tour. So if you're interested, go to the hotspotting.com.au website and click on events, and then you'll find out more information. And it'd be great if you signed up and came on the day. Well worth it, I think. All right, so we've been going for 1 hour and 20 minutes. It might be a good point to call it quits for tonight. Thanks everyone for your participation. It's been a particularly good night in terms of the range of questions, different issues, great questions. In fact, thank you all for what you've sent through. Really enjoyed the interaction, and we'll do the same thing around the same time. It'll be a Wednesday night about the middle of April when we next do it. In the meantime, if you've got any questions, send me an email, ryder@hotspotting.com.au. If you're interested in what we have to offer in terms of products that help investors, go to the hotspotting.com.au website and check out the range of reports. Other products I do one-on-one strategy sessions with people. We do it via Zoom or Skype, unless you happen to live in my hometown. Most people don't. And there's mentoring services. There's a whole range of products that are useful to both property investors and also real estate professionals. So if you haven't already done so, check it out. Okay, that's it for now. I'm going to go and do something else. Just checking. Yep. Thank you for all those thank yous, Adam, Kieran, Leanne, Nikki, and others. Really appreciate your feedback and your contributions tonight. Okay, signing off. Let's do it again soon.